China. Tonight we talk about China, folks. It has been a mess in terms of their markets, an absolute mess in terms of their economy. We got quite a situation brewing in China right now, and I want to speak about and kind of react to in this video China's new moves to hopefully boost confidence, to boost their stock market, to boost the economy, those sorts of things. We'll get into that. I want to share my perspectives and opinions on that. Obviously, like China's such a massive market, it has ramifications for the U.S. stock market, it has ramifications for the U.S. economy, for the European economy, for the European stock market as well. So I want to react to this, hear what's going on there, and kind of give my 2 cents in regards to that. This is from 2 hours ago, okay? Then I want to react to this one from 32 minutes ago. Evergrande. We haven't heard about Evergrande, as I like to call them. We haven't heard about Ariana Evergrande in quite some time, folks. It has, look at this. Evergrande ends 17-month halt. Are you flipping my flapjacks? A 17-month halt after posting a $4.5 billion loss. So I want to hear what's going on there, kind of give my opinions and perspectives. So just a China-focused video. We don't obviously talk much about China, but it's a very important market. It matters in a significant way. And I bought this Win hat, by the way. Just a couple hours ago, I posted. I was at the Win, man, and I said, should I buy it? 57% of you guys said I should buy it. So 57% is the majority, so we went ahead and made that move. Appreciate everybody joining me as always. Thanks so much for being here, folks. Thanks for being subscribed. We're now new all-time high subscribers in the history channel. I appreciate y'all being here as always. If you're looking to apply to join my private group, check out the pinned comment down there, and we can get you in there. All right, let's get into this.
String of moves to support the economy.
Absolutely. And the stock market kind of seen as a proxy, obviously, to the economic woes seen in China. You can bring up a number of different stock charts to show that it's down about 8%. The CSI 300 down about 8% over the last month. It's down about 12% since its peak this year on January 30th, and down 36% since the peak that we saw back in February of 2021 through the pandemic, down 36%. So it's lost a third of its value. So
lost a third of its value in a matter of just over 2 years now at this point in time, and the market just hasn't recovered. That's the big thing with the Chinese market. It seems like it's just gotten worse and worse and worse. Whereas the U.S. market, obviously, we bottomed out this baby back in Q4 of 2022, right? And we've obviously had ups and downs along the way, but ultimately we've recovered the market in terms of the free fall. In terms of the Chinese market, it just hasn't performed like that. And I mean, a 7-8% move down just in the less than a month, that's a pretty dang significant move, especially when you've already seen a lot of pain.
And as a kind of a proxy to all the weakness, but then the news flow has been very negative. We've had the ongoing property sector problems. We've had trust defaults and, of course, weak consumer sentiment.
And by the way, if you want to know why real estate matters so much in China, I'll explain to you exactly why. The reason real estate matters so much in China is real estate is really seen as the main investment vehicle in China. Whereas in the United States, a lot of us might own real estate. You might own a home. You might own a real estate investment property. But for most folks, they have what's called a 401k. Okay, and they stack money into that 401k. So you're usually in the United States, it's very common to be mostly invested into the stock market, into companies, into company earnings over time, right? Whereas the Chinese just have a different way of looking at it. Some put money in the stock market, but some feel like it's too much of gambling. So a lot of folks like to just put their wealth in real estate, and that's where things like Evergrande come into play, right? And obviously we've seen that it's not as safe as it might have seemed to folks. Just people like the physical, the real estate. You can touch it, you can feel it. Versus companies, it's just a piece of paper. You have part ownership. I don't know about in China. That's a whole different situation. But in the United States, at least, you have part ownership in a company, right? You buy Wynn stock, you are now literally part owner of Wynn Resorts. You might be a very, very small owner, but you're literally part owner of the company now at that point in time, right? So I have a very different view on it. In the United States, we have a very different view on it. And in China, people just don't trust it as much, and especially in regards to the Chinese stock market. A lot of people in China, believe it or not, they'd rather put money in the U.S. stock market than their own home market. Let that sink in. And you know what? A lot of them would rather also buy U.S. real estate versus buying Chinese real estate. A lot of them would much rather buy a property in L.A., here in Vegas, in New York City, wherever, than buy something actually in China. Ask people that live in Vancouver, Canada, about that.
Basically, there's a mattress mentality. People are sticking their
Shout out to if anybody's watching this that lives in Vancouver. You know what I'm talking about.
money under the proverbial mattress, not spending, not buying stocks, and then foreign investors are not buying into China because of slew of weak news and also weak sentiment and geopolitical concerns. You've had foreign investors into China.
Yeah, the main reason it has nothing to do with actually economic data, although it's been pretty dang bad out of China, pretty depressing as far as economic data for a while. And even some of the things we've heard recently about 22% or 20% plus youth unemployment in China, like the numbers have been awful. The main reason that U.S. investors don't want to stick money in Chinese stocks or the Chinese stock market. Why do I not want to go out and buy Chinese stocks? Why do I not want to go buy the Chinese stock market? I'll tell you exactly why. I don't trust it. At the end of the day, when you buy these Chinese companies, you're buying the hope of ownership of an entity that's in the Cayman Islands or some island that somehow reverts back to China. It's a bunch of crap, man. It's a bunch of freaking crap. You're buying ownership in some entity in an island over there that is supposed to represent somehow ownership of Alibaba or whatever company. Come on, man. It's ridiculous, okay? It's not like buying Apple stock. It's not like that at all. This is like if Apple stock was registered in some island over there, and then, you know, it was like the hope of like ownership over here in this company that somehow goes through this. It's a bunch of crap, man. It's a bunch of crap. And especially when the Chinese government has been a government that at the end of the day, if they want something done with these Chinese companies, they have it done. Whether that means removing somebody from a top leadership position, whether that means, you know, we're going to make this move and that move. It's a whole different scenario over there. And so we just don't trust it. That's why we don't buy Chinese stocks. That's why we don't put our money in the Chinese market until that trust is built. Remember, when it comes to making an investment, you have to trust. You have to trust the other side of the transaction. If you don't trust the other side of the transaction, you're not going to make that investment. Trust is always the most important thing when it comes to investing. Everything else comes after that. Financials, valuation, everything else. Trust is always number one. And if you don't have the trust, you can't go from there.
Being net sellers for 13 consecutive weeks, 13 consecutive sessions through Wednesday. That's the longest streak ever. So you can see all that is anecdotal, but also very data-driven evidence that the Chinese authorities need to do more. And that's what they've done. Two different agencies coming out with easing measures. You have the Ministry of Finance coming out and saying we need to invigorate capital markets and boost investor confidence, to say the least, for sure. So they're going to be cutting, as of today, the stamp duty by half from 0.1%, this is on stock trading, to 0.05%, whether that encourages the largely retail market in China to take that money out of the mattress and put it into a falling knife. That's yet to be seen, obviously. Then we also had separately the CSRC, the Securities Regulator.
This shows you how dire this is. This shows you how dire this is. China last cut stock stamp duty in 2008. If that doesn't tell you how dire of a situation this is, you know, I don't know what to tell you. Like, that is ultimate, like, oh, yeah, we're doing everything possible here when you're doing something you haven't done since 2008.
They're saying that because of recent market conditions, it is essentially going to at least temporarily put a moratorium on new initial public offerings. It didn't give them
won't even let companies go public right now because they need investment into the companies that are public right now. Interesting.
As to why that might boost the market, but obviously it doesn't do a lot for sentiment when new issuances perform pretty badly. Also, it kind of keeps money from flowing out of fundamental stocks and into these new issuances. So a couple of moves by authorities in China to try and stem that rout in stocks. Is it enough, though? Again, that's the big question.
And of course, we had industrial profits data over the weekend. No kind of meaningful surprise, right? What does it tell us? I guess just another puzzle piece in terms of what this weak recovery is looking like.
Absolutely. It just shows a further deceleration of profits in the industrial sector. Yes, it wasn't as bad as June. So we had industrial profits falling 6.7% year over year in July versus 8.3% in June. So not as bad. But again, through the first 7 months of this year, it's down 15.5%. Not as bad again on year ago levels of 16.8% year ago numbers. But again, it just really shows China's economic recovery lost further momentum in July.
I was in the gym the other night, the community gym in my community, right? And these folks come in, look like likely a Chinese realtor, sounded like they were speaking Mandarin, a couple Chinese clients, obviously from China, and they're looking at potentially buying a home in my community, right? You think I'm going to Shanghai to buy a home? You think I'm going to Beijing to go buy a home? No, I'm not. I'm not going to invest in their communities. They're coming to buy into my community. That's the difference. They're coming to buy into my community. That's where it gets into trust. That's where, people can make a lot of money in China and then they're like ready to get it out. They're like, let me go to America. Let me go buy real estate in America. Let me go build a life in America, right? Let me go plan my future and my kids in America. That's where the difference is. I don't know anybody that's ever that made a bunch of money in the States and is like, I'm going to go move to Shanghai. I'm going to go move to Beijing. No, it doesn't happen. It happens every day. A million times, well, not a million times a day, but 100 times a day in the United States, Chinese money coming to America. Let that tell you something. Let that tell you something, right?
Recovery and deflationary risk. Deflationary risks are a big issue here, remain an overhang on this industrial sector. Yes, in July, there was heavy rains in many parts of China. There was flooding, so that dampened output. But again, the overall sentiment is weak demand, and that leads to weak production and weak profits.
Interesting. Yeah. So at the end of the day, I don't think any of that is magically going to save the market, just to be quite frank. I think at the end of the day, and I can't wait to get into this Evergrande situation, they've got to build trust back. If they think, we're going to make this stamp duty, they are so flawed in their thinking like, this little adjustment's going to magically fix things for us. No, maybe it fixes it for a day or a week. That's not fixing things long term. Trust. Until they build trust from the investment community, they will not be able to attract money, especially foreign money, to invest into China. And nor will Chinese folks want to invest their money. They'll make money, run their businesses, and then they'll take that money right out of China. They'll find ways to get it out of China, which China tries to limit all these ways of getting money out. These folks are smart. They figure out ways to get their money out of China, okay? There's many various ways of doing it. They always figure out how to do it. And so until they build trust, that market's not going to be magically saved. And the second component is, this is very important, is we've got to see also a recovery in their economy in a substantial way. Trust in a recovery in the economy, then we're talking. But the problem is, especially with trust, that's a multi-year effort. You don't magically fix trust overnight. It's going to take multi-years of China making the right decisions. All of us with money in the States, in a lot of Europeans with money, we're all watching. We keep an eye on stuff. But until they do decision after decision for years to build that trust there, we're not going to consider that. Nor are the smart Chinese folks that make a bunch of money over there and become millionaires, multimillionaires, high net worth individuals. Those folks are all watching everything. And until the Chinese government makes a lot of right decisions, which is basically capitalism, folks aren't going to have trust there, okay? So they got to recover the economy and they got to recover trust. They do that, and then we're talking. All right, what's going on with Evergrande in this whole situation?
Increasingly more information about what's happening with these structurings. Of course, the poster child of this is Evergrande. Reported results in the weekend. It's resuming trade today. This one's going through the floor, isn't it?
Yes, it'll, just like many of the other developers that have resumed after a year plus of activity, Evergrande investors have 17 months of news to react to. So since then, we've had $85 billion of losses that Evergrande has reported over the last 2.5 years. I mean, it's just a gigantic number. Granted, most of it is write-downs, impairments. It's not really operating losses. But still, that size of red ink, plus all the bad news we've seen in property from China over the last year and a half, that's all going to get baked into the stock today.
We call that a chef. Oh my
We need
gosh.
to watch in this restructuring efforts right now. So we have the earnings. We're probably going to get a bad day in the stock. We're pushing this forward in what way?
So we have the creditor votes this evening, both in Hong Kong and in the Cayman Islands, regarding the offshore debt restructuring. There are 4 different classes of creditors. The one class to watch is Evergrande Class C. Now, that's made up of things such as private loans, some repurchase obligations. That is the group that, as of April, the last time Evergrande gave out any update, that only about or so percent of people had been backing that support. Now they need to get to 75% for each of the classes in order to be able to get this debt restructuring to move forward to the next step. So that's the group.
You hear that? Coyotes. Coyotes are coming.
People are going to be watching as to whether or not there's been support built up over the last few months from them.
Right. If you could tell us a little bit more, too, about the housing market and the measures announced on Friday and how that dovetails into just a broader easing of perhaps some of the potential pain that we're seeing.
Sure. We're looking for... China is trying to get demand going.
Okay.
And one way to do that is, hopefully they think, is to reclassify who exactly qualifies as a first-time home buyer. So what they're doing is allowing folks who have already paid off a mortgage to again be considered a first-time home buyer, which will allow them to qualify for lower rates than what second and third home buyers currently do.
Oh man, what a mess. And in terms of that whole real estate situation that's going on there from Ariana Evergrande, I mean, this is a situation that's going to take, it seems like at least another 6 to 12 months, minimum another 6 to 12 months to work through this mess until they can finally maybe bottom out things. And then you're going to have kind of a bottoming out phase for, maybe a year or two. And then maybe they can start going up from there. But we know when it comes to the real estate market, we went through this in the United States. We went through this back in all the way from 2007 through 2011, a real estate disaster. It took years to work through that. Years. That's what happens when you have a real estate crisis. China has a real estate crisis. This is not fixed overnight. It takes years. And you have a very vicious couple years to go through where it just seems like it's just not getting better and it just gets worse and worse and worse. Then you have a bottoming out phase for that sometimes lasts for 1-2 years. Kind of just, not much happening. And then slowly growth starts again. And then you can maybe have a nice 5, 10, 15-year cycle again. But it's a process to go through. It does not happen overnight, folks. Okay. So appreciate everybody joining me as always. Thanks so much for being here, folks. Thank you for being subscribed. A little different video. It's important. We cover China, obviously, and some of these matters that are going on over there, folks. So yeah. Much love as always. If you're looking to apply to join my private group, check out the pinned comment down there. We'll get you in there. Much love and have a great day.